I'm joined with the great Rob McEwen from McEwen Mining. Rob, thanks for joining us.
See it? Thank you.
So let's start with the big news. Yesterday, Trump announced 50% tariffs on copper imports, which obviously led to a big jump in the price of copper. You think that this is the start of a new bull cycle for copper, or is it just a blip?
Oh, it's already underway. Um, it's going to focus the world on the shortage of copper. I mean, I understand that the United States imports 50% of its copper annual consumption. So you go, all right, well, this is really going to encourage a lot of exploration for copper in the United States.
Yeah.
We do have a copper project in Nevada.
Yep.
That it'll help.
The gold bar mine.
Yeah, well, no, this is Elder Creek.
Okay.
It's there's copper showings on it. It's in the Cortez trend. We don't really play it up, but we will now.
Is it operating or it's...
No. It's a exploration project.
Do you think that this is, I know a lot of people, they say, don't pay attention to what Trump says, pay attention to what Trump does. You think that this is serious, the tariffs on copper?
It's hard to know what's serious. All I know is that $5.50 copper, and we did our preliminary economic assessment at $3.75. That's almost a 40% increase over the price. So it's good. So I'd like to stay up there.
Now, I can't recall if we did an interview last year at the Rural Symposium 2024. Were you here last?
No.
No, okay.
So we didn't do that.
That's easy to confirm. But since last year, we were sitting here. By the way, this conference was a lot smaller last year. This room that we're in that's filled with companies was like basically us and I think Kai Hoffman and some coffee carts. And now it's filled. I've had probably dozens of people come by saying how much they enjoy the work we're doing at the Deep Dive, which normally doesn't happen, which tells me that...
Very gratifying, isn't it?
Yes. I don't know if it's that our work's gotten way better or if it's that we are in a bull cycle. But things are flowing. The sentiment definitely seems to be in the air right now.
And are there all sorts of companies trying to advertise on your site?
Yeah, it's very, very different. I mean, we've also gotten a lot better too at figuring out who we want to put in front of our audience. The people who take the time to watch our content is something that really it means a lot to us. So we don't want to just be putting out bad companies in front of them. We want to make sure that we're bringing them real operators that are trying to build real projects where they have opportunities. Of course, it's up to them to do their own due diligence, but we want to make sure that we're working with the right people. So that's why we come down to these things. And we've learned a lot over the last 5 years from just chatting with people like yourself and learning a lot of those, when we have made a lot of mistakes since we started out. And I feel like that's kind of resonating right now with our audience who they recognize the progress that we've made, but that we're also now talking to more quality people such as yourself.
Well, I mean, you're at a point too where commodities relative to financial assets as measured by the S&P 500 are at 55-year low. And commodities, by their nature, are cyclical in price. Yeah. So we're coming off the bottom. And I think I saw some technical analysis and it said if copper broke $5, it's starting to run away. And we're at $5.50 the other day. Whether that's sustainable or not is a question. But it's certainly, on a technical basis, it's in new high territory.
So there was some news that came out this week that the Canadian government's in talks to fund Rio Tinto as a result of the current tariff environment. Do you think that the Canadian government should be helping corporations get through this tariff environment?
Canadian government should wake up and understand that we have all sorts of potential mineral wealth and that they should be embracing mining with a big welcoming bear hug rather than saying, no, you can't do that, and shorten the permitting time, increase our exports. Other countries will have to buy our exports. They're going to have to buy Canadian dollars. Our exchange rate will go up vis-a-vis the US. and our inflation rate will go down as a consequence of that because it won't cost us as much to buy. It would improve the standard of living in Canada immensely.
So I always heard this when I was a kid from my parents or my uncles and aunts that Canada needed a cheap dollar so that we could sell our goods abroad, and specifically, I guess, value-added products, manufacturing, that sort of stuff. Do you think that argument actually holds, or is it the manufacturing that basically exists in Canada just a result of subsidies?
Perhaps in manufacturing, because our labor rates were higher. I mean, you think of why was there all the offshoring? It was occurring because the cost of doing business in Canada, in the United States, in Europe was high, and Asia offered a low-cost center. And that's why China became the manufacturer to the world. Uh, Here we have a world that is very anxious about the supply. Where are they going to source their metals to drive their economies? So you're looking at sovereign states scouring the world right now saying, can I find a place that is stable and a secure source of raw material? China has basically bought Africa. Then you're looking and saying, well, because of the geopolitical conflicts, there's a lot of places China's not going to sell critical minerals. Russia's got a little battle going on with America, and they are very mineral rich. And they're the associated BRIC countries that aren't really too keen to help America out. So you're just seeing countries going around and say, oh, we got to develop our own natural resources if we're going to have any industry. And you're seeing major corporations, manufacturers doing the same thing. I mean, in our copper project, Stellantis, the sixth largest car manufacturer in the world, is our second largest shareholder. And it surprises when we talk to the car manufacturers. Volkswagen had 6 geologists on staff. You go, really?
Yes.
But Tesla was buying lithium, and Tesla was getting into nickel. So all those components for building batteries to deal with, climate change, alternative energies, electrification, you need those metals. And what this sector has been underinvested in for quite a while, and the timelines to bring new projects on are very long. I mean, they're 10, 15, 20 years before you get it. And we're getting into a point where there's much more demand happening, and we don't have the supply. So you're going to get prices pushed higher.
So let's talk about McEwen. You guys recently changed the name to McEwen Inc.
Yes.
What's behind the decision to change the name?
Shortening the name. Simplification, right? It was McEwen Mining Inc., and now it's just McEwen Inc. It was to give us more flexibility in this space, to think of areas where we're working on some recovery processes, we're looking in some other areas, and it just opens the field more.
So you guys also recently announced that you've entered into a new chapter of growth at the Fox Complex. What can you tell us?
A lot. The Fox Complex, there was Black Fox, and we stopped mining there, and we moved to Froome, which was next to Black Fox. Froome is 35 kilometers away from our mill. So we're moving our production to where our mill is, and that was a former producer that went down 300 meters, and there's gold on the west, the east, and underneath. So we don't have to transport, so we're saving money on transportation. The ore at Stock is softer than the ore at Froome, so we're able to process more material through the mill, produce more gold that way, lower our unit cost. And very importantly, the previous owners of Froome and Black Fox put a stream, an 8% metal gold stream on the property. That meant we were selling 8% of our gold at just over $600 an ounce. And that's gone because there's no stream over here. So that'll be a considerable increase in our revenue. I mean, it's $3,300 an ounce, and you're selling it at 600.
Yeah.
There's $2,700 in there. I mean, it's like a 4x improvement, more than that, on 8% of our production. So it will that'll be much better. So those are the principal benefits of moving there. Our exploration has allowed us, if I can be liberal enough, to take our proven, probable, and indicated and inferred, which security commissions don't like you to say. But if you put that,
I think it's okay if you preface it with, I'm not supposed to be doing this, but let's just do the linear exercise of adding them.
Thank you for that clearance, Steve. If anyone comes at me, I'll say that you said it was funny.
Yeah. Let's go after the guy who has no money.
I don't know about that. You were renting and you went to Chick-fil-A. When you're high dining. Okay, so this gold assets are 4.2 million ounces in all those categories. Our silver is just over 37 million ounces. And the 46% owned attribution of copper we control is over 19 billion pounds of copper. So we'll be taking Fox and Gold Bar we own 100% of, and our San Jose interest is 49%, but we only get a dividend. We don't get any of the metal. We will be going from about 70, 80,000 ounces, 90,000 to 175,000 ounces between those 200% owned operations by 2030. Our free cash flow, we expect to get up to 350 million per annum based on where gold is today. So it's good.
So last question for you here, Rob. If you and I are at the Rule Symposium in 2026, and you're telling me it's been a very, very successful year for McEwen Inc., what does that look like? What are those things that you accomplished?
We will have started mining at Stock. That'll happen later this year. We will have put out a feasibility study on Los Azules in August of this year. We will have been doing more exploration, so I expect those resources at Fox, Gold Bar, be going. If we got enough money at Los Azules, we're going to be doing more exploration there because we have a number of satellite targets, and it's a porphyry copper deposit, and they tend to occur in clusters. So we found copper oxide on surface on one, quartz veining looking just like Los Azules, a huge molybdenum signature that's associated with copper. So we could be growing that resource. And in Gold Bar, we're exploring, but we picked up a property called Timberline, or a company called Timberline. They had property 30 miles away from Gold Bar. We will be applying for a permit there to mine it. There's about 500,000 ounces there. And there's another property in Nevada called Seven Troughs. It really has me intrigued because in the early 1900s, it was producing gold at over an ounce a ton. And there's nice nuggets that come out of the ground. And so we're exploring it. We just took all the data, modeled it. There's a large clay cap layer, which is typical of an epithermal deposit. So I'm quite intrigued to see what comes out of that, because it was it was one of the richest places in Nevada for gold.
All right, well, Rob, as always, it's great chatting with you. I know our audience loves it. I appreciate that you've been engaging with us for all these years, hopping on here and chatting with us from our early days to today. So hopefully in 12 months, we can sit down and review what the last year looked like. And
you can hold me to task and see if any of those came past.
We'll sit down. We'll do the interview at Chick-fil-A.
Well, could we do one that's indoor?
Thanks for having on, Rob.
Thanks, Steve.